Collapse File Number 15. Subject: Nelson Bunker Hunt and William Herbert Hunt of Dallas, Texas. Occupation: billionaires, sons of one of the richest men on earth. Position: nearly 200 million ounces of silver. Exposure: everything they owned. Cause of death: they tried to buy every ounce of silver on the planet, and the casino changed the rules. This is the Collapse Files. On the morning of March the 27th, 1980, the Hunt brothers of Dallas woke up worth billions. By the closing bell, they were ruined, and they had very nearly taken Wall Street down with them. Nelson Bunker Hunt. Rumpled suits, thick glasses, a Texan drawl. He looked like a small-town accountant. He was, for a time, arguably the richest private citizen alive. His father was H.L. Hunt, an oil wildcatter reputed to be the richest man in America, a man who had won one of his first oil fields, so the story goes, at a poker table. The Hunts of Dallas were oil, thousands of wells across Texas and beyond. The family fortune was measured not in millions, but in billions, at a time when $1 billion still meant something. And Bunker had inherited his father's defining trait, the absolute conviction that when he made a bet, the bet was right. Then, in 1973, this man taught Bunker Hunt a lesson about paper wealth. Colonel Muammar Gaddafi nationalized Libya's oil fields, including the one that happened to be Bunker's crown jewel. One signature in Tripoli, and billions of dollars of Bunker Hunt's oil simply stopped being his. No court could get it back. The lesson he took was simple: anything written on paper can be taken away. And in the 1970s, paper was failing everywhere. Inflation was gnawing through the dollar at double digits. Bunker watched the currency his fortune was written in rot in real time. His answer was silver, real, heavy, uninflatable. No government could print more of it, and no colonel could nationalize a vault in Zurich. So that same year, Bunker Hunt started buying silver futures, not as a hedge, not as a position, the way a man buys something when he intends to own all of it. Alongside him came his younger brother, William Herbert Hunt, the careful one, the one who read the contracts. Bunker believed, Herbert calculated. Together, they began to swallow the silver market whole. They had form. In 1977, the brothers had quietly amassed soybean positions far beyond the legal limits, spread across family accounts, by some estimates a third of the entire crop. The regulators sued, the Hunts paid, and the brothers learned a second lesson. The penalty for cornering a market was a fraction of the profit, so why not try a bigger market? But here is the thing about the silver market, the thing the Hunts either never understood or understood too late. The exchange isn't a marketplace, it's a casino, and the house makes the rules. Because the men who governed COMEX were not neutral referees, several of them, it would later emerge in Congress, held short positions in silver and personal bets that the price would fall. Remember that, it matters later. The Hunts did something futures traders almost never do. They took delivery. Instead of settling contracts for cash, they demanded the actual metal, draining physical silver out of the exchange warehouses. In 1979, they chartered 3 Boeing 707s, and by contemporary accounts, flew some 40 million ounces of it out of the country. The guards for the airlift were recruited from the family ranch, cowboys, chosen by shooting contest, riding shotgun over a fortune in bullion at 30,000 feet. Destination, Switzerland, vaults no American regulator could touch. Bunker Hunt had learned the Libya lesson well. By the middle of 1979, the brothers weren't buying alone. Through a new venture, Saudi money joined the pool, and the buying accelerated beyond anything the market had ever seen. At the start of 1979, silver traded around $6 an ounce. By New Year's Eve, it hit $34.45. By January the 18th, 1980, it touched just under $50 an ounce. Silver had multiplied roughly 8 times over in a single year. Nothing in the metal itself had changed. What had changed was that 2 brothers from Dallas owned, by some estimates, a third of all the deliverable silver on Earth. America noticed, and America went slightly mad. Families melted down heirlooms, grandmother's tea service, wedding cutlery, christening spoons, because the metal was suddenly worth more than the memories. Lines formed around the block at refineries and coin dealers. Some assay offices grew so overwhelmed, they simply stopped taking the public's silver. Industry, meanwhile, began to scream. Silver wasn't just jewelry, it was in photographic film, in electronics, in every X-ray, in every hospital in the country. Film manufacturers watched their single most important raw material multiply in cost eightfold in 12 months because of two men in Dallas. On Fifth Avenue, America's most famous jeweler was watching its raw material become a speculative weapon. Tiffany Co was about to do something extraordinary. Hold that thought. Because in January 1980, the Hunts were untouchable. On paper, the brothers were up by some estimates more than $3 billion. The bet of the century had worked. Exhibit B in this file, a change to the COMEX rulebook, adopted January 7, 1980, innocuous, administrative, titled Silver Rule 7. Silver Rule 7 slashed how many contracts any one player could hold. On paper, it applied to everyone. In practice, there was exactly one player on Earth it touched. The exchange, the same exchange whose board members held bets against silver, had aimed a rule squarely at the two men who were winning. 2 weeks later, on January 21st, the exchange went further. Silver trading was restricted to liquidation only. In plain English, from this day you may sell, you may not buy. Think about what that means. The Hunts had cornered the game, so the casino abolished buying. The only trades allowed were the trades that pushed the price down. The game could now only move in one direction. And it did. From the day of the liquidation order, silver began to slide. Within weeks it had halved. And for the Hunts, a falling price wasn't a paper problem, it was a time bomb. Because the brothers hadn't just bought silver with cash, they had bought much of it with borrowed money on margin. When the price rises, margin makes you a king. When it falls, the broker calls and you must pay the difference, immediately, in cash. At the scale of the Hunt position, every $1 drop in the silver price meant tens of millions of dollars owed. And silver wasn't dropping by dollars, it was dropping by tens of dollars. Through February and March, the margin calls came daily. The Hunts wired out fortune after fortune, and it was never enough. They pledged oil leases, real estate, coal rights, the family silver in every sense. Bunker even pledged his thoroughbreds, one of the largest racing stables on Earth, collateral for a bet on shiny metal. In Washington, the chairman of the Federal Reserve, Paul Volcker, began asking quiet questions, not about whether the Hunts would go broke, but about who else they would take with them when they did. Exhibit C, the New York Times, March 26, 1980, a full-page advertisement taken out by Tiffany Co, attacking its own customers' mania and the men behind it. Quote, "We think it is unconscionable for anyone to hoard several billion, yes, billion dollars worth of silver. Unconscionable." In print. The next morning, the market answered. Thursday, March 27, 1980, Silver Thursday. The brokerage bark had issued the Hunts a margin call north of $100 million. For the first time in the family's history, the answer came back: we cannot pay. Word tore through Wall Street. Silver collapsed from $21.62 to $10.80, half its value gone in a single session, and the stock market convulsed as traders dumped everything to guess who was exposed. Bark was staring at ruin. Other brokers wobbled. The unthinkable questions circulated. Could two Texans losing a silver bet actually cascade into a full financial crisis? That weekend, with the blessing of the Federal Reserve, the largest banks in America were marshaled into a rescue, not of the Hunts, but of everyone the Hunts owed. 13 banks assembled a loan of $1.1 billion. At the time, one of the largest private bailouts ever arranged, secured against the family's oil empire, to unwind the silver position in an orderly fashion. The dynasty survived, mortgaged to its neck. The corner was dead, and the reckoning was only beginning. Congress hauled everyone in. The hearings dwelt on an uncomfortable detail. The exchange that changed the rules had been governed, in part, by men positioned to profit when silver fell. Nobody at the exchange was ever punished for it. The Hunts were. In 1988, a jury found the brothers had conspired to corner the silver market in a suit brought by a Peruvian minerals company, with damages that came to roughly $134 million. That September, Nelson Bunker Hunt, son of the richest man in America, once perhaps the richest private citizen on Earth, filed for personal bankruptcy. At the time, one of the largest in American history. The regulators added the final insult, millions in fines, and for Bunker, a lifetime ban from the commodities markets. The man who had owned a third of the world's silver was no longer permitted to trade a single ounce of it. The horses were auctioned. The oil empire was carved up over the following decade. The Hunts remained wealthy by any human standard and broken by their own. Asked years later about losing the greater part of the family fortune, Bunker Hunt is said to have shrugged and offered a one-line epitaph for the whole affair. $1 billion, it just isn't what it used to be.